teleprompter for these things.
Yeah. All right. Welcome to the Sushi Onsen AMA, where we host projects that have partnered through the Onsen program and give them a platform to reach a larger audience. Today we have Benny from Wootrade, with us. Thanks for coming out and welcome to the sushi community, man.
Yeah, thanks. It actually just Ben is fine. My name is
Ben,
Ben
gotcha.
York. Yeah.
Okay,
Um,
gotcha.
so yeah, officially I am the marketing VP here with Wootrade. But as many startups go, you end up being very involved in all the different aspects of development. So like business development, especially on the DeFi side, and then some strategy, communications, PR, just all that kind of stuff. So yeah, looking forward to it.
Awesome, awesome. Do you want to just give a brief overview of WooTrade? I know it's a trading platform, but just to give maybe like a couple minute brief to somebody who has absolutely no idea what WooTrade is.
Okay. Yeah, I'm expecting that a lot of people probably don't really know what Wu Trade is. There's been a lot of excitement around like the Wu token itself, mainly just because of this bull market phase we're in, and I guess everything kind of all these new tokens kind of shooting up. But Wu Trade's not exactly a trading platform per se. I mean, we're actually a liquidity provider, and we started as like a B2B network that plugs into other institutions and exchanges. So for example, a lot of tier two exchanges like Gate, BitMax, like these kind of exchanges, for them having good liquidity is a problem because, you either need really big market makers on your exchange, but they don't want to come unless you have traders. And then traders don't want to come unless there's liquidity. So you get this kind of chicken and the egg problem. So that's kind of where WooTrade comes in, right? Because we can mirror our order books, we aggregate from all over the place, and we provide it to them for zero fees. And we'll get more into that a little bit later. But originally our background, there is a big quant firm called Kronos Research. I don't know if you guys are familiar with that. You probably heard of Alameda Research, obviously, if you're in the sushi space. Um, so a little bit similar to that, but we're more focused on the HFT trading side. So we're one of the largest traders in the space. I think we do like 5 to 10 billion a day. Um, and that's kind of how we got started. The founders are from there. They're all from TradFi, working for firms like Deutsche Bank, BNP Paribas. So we're really well networked in the trading space. And that was like 2018 when Kronos came out, and it was pretty successful for HFTs in that time, similar to Alameda, just because there's not a lot of competition, right? The big institutions hadn't really made the jump to crypto. And so the people who were willing to be bold and be in that first wave, they were very successful at trading. And from there, I mean, we started to have problems where, every exchange, there's so many different exchanges and trading platforms around the world, centralized ones, that they all wanted Kronos to connect and trade, right? So it became an issue because we were too fragmented, and you have risk every time you're moving funds onto one exchange, let alone 20 or 30 different exchanges around the world. So in traditional finance, they have these things called dark pools, and dark pools are basically just like private equity pools that are very, very liquid, and very large players come to these to trade. So we did a similar thing, where basically instead of going to all the exchanges, we just let the exchanges connect to us. And that was 2019 when that started. But we didn't involve the token or anything like that. It was just an institutional trading network. So now we have like 20 plus institutions connected to the network. And it's kind of moved away from just exchanges. It's also like wallets, OTC desks, that kind of thing. So that was going pretty well. And then obviously the DeFi summer last year, that was fun to be a part of. A lot of these trading platforms like Sushi, suddenly those became places where people, institutions, bigger traders, active traders, professional traders were moving into. So that was an opportunity for us as well. And we started to experiment with creating our own pools. And this is something that we'll get into a little bit later with the Mirren proposal from Sushi that we're really interested in. And basically, instead of using just like a standard AMM, to dictate the pricing on the pools, we were using our off-chain market making strategies, which basically means we just put in accurate prices into the block itself, which we were doing on BSC as kind of an experiment. So that was very successful. And so we're looking to really move into the DeFi space as much as possible, which is why we reached out to Sushi originally. And we got in touch and we started talking about the possibility of doing something like the Mirren proposal. And yeah, I mean, the conversation moved quickly from there. And they said, we could also put your token on the Onsen menu, which we thought was fantastic. So here we are. I think that kind of gets everyone caught up. We're basically a CeFi liquidity provider that last year also became a DeFi liquidity provider. And also we have a CeFi exchange for our professional traders, which is a way for active traders to manage their assets on the network. But we're going to be opening it up to more people in the future. And sorry, I'm rambling a bit here. There's a lot to get to. The caveat thing is everything is zero fees. And we do that because we are background is trading, right? So we're able to we trade very high volumes on large exchanges and we get maker rebates from there. So we're able to earn from that side and then subsidize retail using those fees. So it's actually a very good model. If you're familiar with traditional finance, everything has moved that way as well towards the zero fee model because as you aggregate more and more sources, it just becomes cheaper and cheaper, which becomes a race to the bottom and eventually get to zero fees. So that's what we're doing. And we think that eventually in the CeFi space, everyone's going to go zero fee as well. But right now we're positioned very well. We have the advantage based on our trading background, right? So that I think that's everything. And I'll put it back to you, I guess, and see if you have any feedback or let me know if that was clear or not.
Yeah, no, I mean that was great. I initially I figured that the trading platform was sort of like your guys' biggest product. Is that not the case?
I would say no. I would say the trading platform, it's one product in the Wootrade ecosystem, and it could potentially, rise up and become very competitive in the space. But that's not the only thing we're dependent on, I guess. We're at the beginning, we're more focused on the B2B clients, right? Signing up institutions, exchanges, because it's like one point of to business development side. But then you can capture a lot of flow because our objective is to get as much flow and liquidity on the network as possible because that makes us more attractive to bigger players, right? And that's how we grow. So the B2B network was definitely the priority. But honestly, since DeFi came out, that's become another one of our priorities. And that's something I'm very passionate about on the DeFi side. And the reason that I'm so bullish on this for Wootrade is that it makes a lot of sense because for example, when we started the BSC pools, we put about 2.5 million in our own capital onto 5 pools. We had like a BNB pool, a BTC pool, an F pool, the main assets, which is what we usually trade. And by 2.5 million, and it was the TVL, and then over a month, I think we did like 900 million in volume. So like our capital efficiency is really, really, really high. And when that happens, it also means the yield is really high. So there's a lot of opportunities there. And one of the things as a market maker you worry about, it's what we call toxic flow, which comes from very aggressive HFT. HFT is high frequency trading. When you get very aggressive HFTs going against you, and I think everyone's kind of aware that these players exist. Well, they'll start hammering the order book and kind of manipulates the price. And so that makes it possible for a market maker who is just placing liquidity on both sides of the actual market price to lose money. So in CeFi, it's a problem. We have to try to filter that out through using the API and monitoring like how often people can access the API. But in DeFi, we don't have to worry about this because the block times are a natural filter. So what we found out is that our model is actually more stable. Well, it's very stable in the CeFi, but it's more efficient, I guess is a better word, in DeFi. So that was a very interesting thing that happened, just the block times naturally filtering out the toxic HFT flow. And then the other benefit from DeFi, which I think a lot of us are here because of, is that you don't have to jump through all the legal hoops when you're onboarding people. So like, for example, if we meet like a new client, like an exchange, and we say, hey, do you want to connect to our platform? We give them the whole pitch, and they're very interested. Then they have to take it back, have a few meetings, and then maybe we have a secondary meeting, And then maybe we get the legal team involved, and then there's contracts, and then there's, if everything goes well, then you start onboarding, and then there's simulations, and the whole process just drags on, right? So that's the CeFi experience that we're all familiar with. And then, of course, in DeFi, we have one smart contract. We share it with somebody, for example, let's say 1inch, who is an aggregator and can hit these pools. They say, okay, what's your smart contract address? And then we give it to them, and they're like, okay, that's it, right? That's the onboarding process. And then we start getting flow, provided that we provide the best price, which is something we're very good at. So yeah, that's why we're very big on the DeFi space.
And one thing that you mentioned that I wanted to ask about is that you talked about like the toxic flow not being an issue because of the block time on blockchains. Is that still the case on something like I don't know, like Binance Smart Chain where the block time is very low there?
Yeah, absolutely. Like HFT, like their time frames are like fractions of a second. So when you get like on a CeFi platform, I mean, it could be very, 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 very quick, right? And that can mess with the algorithms that dictate the market making strategies. It becomes like a game of like cat and mouse because the algorithms are set up to respond to increases in like volume, and that's how they decide whether to increase the liquidity as a market maker. That's a little bit more technical, and I'm not really on the market making side, so I probably shouldn't be the one giving the information. But that's the main idea, and just not having those microseconds makes all the difference, right? So even if the block time's like 3 seconds on BSC, that's still more than enough for the algorithms to adjust and process everything that's going on.
Gotcha. And also, just wanted to state for everybody listening in that this is a public AMA. So if you have any questions or want to ask anything, feel free to click the button at the bottom of the channel. I think it's like a hand button. Raise your hand, and I'll be able to bring you up if you have any questions. But let's talk about the Woo token a little bit. So what is the function of the Woo token?
Yeah, that's another thing that we should probably get into because a lot of people are kind of interested in that ever since Suju kind of mentioned us on Up Only TV probably like 2 or 3 months ago, and then there's just like this huge increase in attention and awareness, and our community is actually, it's something I'm quite proud of because I was involved in building it from the ground up, and just something about the way we positioned ourselves. It attracted like a certain type of people who are more interested in researching about projects with good fundamentals and like institutional backing and I guess things that nobody's ever heard of, which might not necessarily be a good thing, but we're working on that. And yeah, I mean, when you start attracting these people, we didn't really go after the big names and the influencer space when we launched, right? I mean, like the Ivans on Techs of the world. We didn't really care to mess with that for obvious reasons. And what ended up happening was the beginning was very slow, but we built like a really high quality community because we didn't have those, I guess we call them like IDO mercenaries who are just jumping from project to project and don't really care about the sustainability. So it was super interesting how that worked out. And the Woo token itself, I think it was at like 3 cents at the start, the IEO price. And now it's trading over $1. So people got in early. We're having it doesn't matter. I don't want to talk about price too much, but the point is the token, because we're a zero fee network, it's used to attract. It's like a access to the network. So if you're an institution, you have to stake a lot of Woo tokens, and then you basically have volume tiers where as long as you stay inside that tier, you can trade for free. And if you go over that tier, you just have to stake more Woo tokens. So that's that idea. That's like the first use case, and then the second use case is through our. I mentioned we have like a trading platform. It's called WooX, Woo with an X after it, which now a lot of people are confusing for that BSC project WEX, but not connected. Anyway, WooX is the same thing, only you have to stake a lot less tokens. And then you access the platform for zero fees. So if you're on WooX and you want to trade, it's aimed at professional traders. It's like very customizable. Like every module, you can resize it and drag it around. So if you want to put like a BTC chart over here and a sushi chart over here, and then like different order books. You can customize them and then just make your layout however you want it. And then you stake, I think it's like 300 Woo tokens, and it's free to trade, unlimited. So you can just go nuts on that, which is really empowering, I think, for people who are trading, because you don't have that. I mean, it's a small fee that you pay on other exchanges, but not having it, I think it makes a big difference, especially if you're going at high volumes. So that's the second use case. And then a third use case is moving into a more decentralized, like a governance model that we're going to have, because we want to become more of a DAO. So there's going to be that. And then there's also going to be a lot of investment products. And this is because as traders, we're very good at creating yield with our capital. I mentioned that before, like we're very efficient. And so we're going to create products around this. And so these are going to be like yield-bearing products or interest-bearing products where you'll be able to put in assets, and then, well, yeah, the trading yields will be translated back to you, right? So it's I guess like one of those investment products that you see on like a regular CeFi exchange, like Binance, where you stake tokens and then you get access to this, right? Except for we're going to be a little bit more transparent about how we generate yields, and I think we're going to position it for more of a risk-averse type client who is going to want to understand how these yields are generated, how sustainable it is, and yeah, so I think that's going to be a big one, and helping us position ourselves. I think those are the two things you're looking for. You're looking for good liquidity, and you're looking for yield. If you can get that in the CeFi or DeFi space, then people generally are pretty satisfied with the product. So, and for the token, yeah, I think those are the three main use cases. We also have this thing called Woo Ventures, which, because as a market maker, we have very good access to deals. People want us to invest early on because liquidity is very important for a token, and a lot of these software developers, when they create projects, they're very weak on the trading aspect of things, the markets aspect. That's kind of our authority. So that's why you see like Alameda Research, like on all these tickets. You see Wintermute, they're getting on a lot of tickets these days. And now also Kronos Research, which is our wing, and then Woo Ventures, which is kind of an extension of that. So basically, we use the Woo token to invest in early products. And then when we receive tokens from these projects, we airdrop them to our Woo holders for free, right? Because basically we're using the Woo Network brand to get access to these deals. And then, so then we want to reward the Woo holders for being a part of that, right? It's creating a group of stakeholders, and everyone's interest is aligned. And that a lot of people are really interested in that. And that side of it is always because everyone likes airdrops. But I think the first one is Dodo. If you're familiar with Dodo, they're one of our partners. We're going to be airdropping some Dodo tokens to our holders, and that's probably going to happen later this summer, the first airdrop. So those are the main use cases. I think I covered it all. I don't know if anyone has any questions that they want to hit me with now.
Yeah, I guess I'm more curious about like the trader side, less about the specifics of like the use cases for the token. I don't know. I guess I'm just curious about like how you guys do zero fee trading. That is like, because I hear like, okay, maybe this is like, maybe I've been like corrupted by like the GameStop trilogy or
Yep.
whatever, but I hear zero fee trading and I think payment for order flow, right?
Right.
Um, and so I'm just trying to, but that also doesn't, like, payment for order flow is not in of itself a bad thing. It's a bad thing when it is used in a
Yes.
poorly, in like a centralized system where you're using just one person who's giving you a price. But so yeah, I'm just curious more about like sort of how you guys get zero fee trading, and if there's some system similar to payment for order flow going on in the background. I assume there is, because I think you guys are doing like directional sort of bets on the way the market goes on short time frames. But yeah, if you wanted to expand on that.
Yeah, this is yeah, I'm glad first that you're interested in this side, because nobody wants to hear someone come on and show their token for an hour in an AMA. But yeah, the trading side, I'll take a shallow attempt at it. Obviously, I'm not the best person to speak on it, because I'm not on the HFT side. But you're right. The payment for order flow is not in itself a bad system. The payment for order flow is a bad system when it is being used without transparency, and when companies like Citadel are, when there's no order book, it's very difficult to have trust in a payment for order flow system. However, when you do have an order book, it takes out a lot of the front running that you could have in payment for order flow. For example, you go on an exchange, you see one Bitcoin for $50,000. You take that order. You are a taker, right? There's no front running that can go on in that process if you're being a taker, right? I mean, that the payment is executed there. The funds go into the user account, then the exchange settles with Wootrade on the back end, right? The zero fee in itself, a lot of the revenue we generate was, like I said, because we are like very, very high on main exchanges, our volumes. For example, take Binance, for example. If you go up to VIP 9 on Binance, which is just really high volumes, it's a very exclusive club. I think there's only like 20 or so in the world, people who have this tier. The maker rebates are quite high, right? So if you're trading at high volumes, Binance is paying you to do this, right? So this this is one point of the payment for order flow. When you're a big trader on every exchange, I'm not saying just Binance, I'm saying like every exchange, you have access to all these rebates. And it benefits everybody. It's really a win-win-win for everyone, because those exchanges are happy because their users are getting good liquidity. We're obviously happy because we're making money. And then the exchanges we're connecting to, same thing, right? They don't have to deal with market makers like traditionally, because they're just reflecting our liquidity, our order books onto their order books. And yeah, it's just a much smoother system for everyone. Now, you also mentioned like the directional bets. We tend to not be very directional. We tend to be a very risk averse HFT. So a lot of it is just like from the market making side, which is, a lot of people are kind of scared of the market makers. They're like the boogeyman in the closet in the CeFi space. And part of that is because they're not very transparent, and they could potentially have a big effect on the market. But what we do at Kronos, and I've asked the CTO, I've talked to them because when I first joined, I was super curious. Like, what are you guys actually doing, And he explained it to me as just like this kind of floating position where everything is taken mathematically. It's very quantitative, based on things like market cap, trade volume. And so they have this, it's all programmed through code. They just put the same amount of buys and the same amount of sells. And when the price moves in any direction, it just slides with it, right? So they would take something off. If the price was going up, they would take some off the lower buys and put it higher, right? So it's just a floating sort of wedge position that goes up and down with the buys and sells. And so, yeah, that's one of the things that we do on major exchanges. And in addition to that, we also have more CTA strategies that are like, those tend to be slightly more directional, but they're on very short time frames. And then there's also arbitrage is a big one. So just trading between different platforms. If you see price imbalances and things like that, we happen to be very fast. So that allows the arbitrage opportunities to get taken. And this is another thing that's a positive for the entire trading ecosystem, right? The things we do tend to be very positive. And like arbitrage is good because it makes markets more efficient, and it balances everything out. So in terms of payment for order flow, it's, yeah, like I said, it's very hard because we have order books. We don't front run people. The trades are all executed. For example, if we're connected to an exchange and you're on that exchange and you take an order, that transaction executes right there on the exchange. The user gets their assets, and then the exchange settles with us second, right? So there's no chance for us to front run in this equation. In terms of like, if you said like a maker order, you said you want to buy, like 49,000 the Bitcoin, right? You could front run that anywhere. Like if that would just be in the order book, and then you just go onto Binance and you see it sitting there, and you just put an order in front of that, right? I mean, that's the other form of front running that occurs in an order book system, but that has nothing to do with like payment for order flow. That's just a problem with CeFi. So what happens is you will get, well, it's not just, sorry, it's not just a problem with CeFi, it's also a problem with DeFi too. So the solution to this problem is better liquidity. When you have better liquidity, then the effects of front running, because you don't care if they buy in front of you, you just don't want them to influence the price when they do that, right? So when you have deeper liquidity, the front running tends to not have a very dramatic effect on the price, which means you're still able to buy and sell and without having, without any impact, negative impact. So yeah, I think that's kind of the two parts. One, we don't front run people. We can't technically front run people with the system. And the third part is our liquidity is actually making front running from other players, less impactful on your execution, your price execution. So sorry, that was not a very technical answer. Like I would have loved to have like the CTO of Kronos Research on here and really break it down for you. But yeah, that'll have to suffice for now.
Yeah, no, that was a excellent answer. Thank you.
Yeah, but I'm sure, like you said, I'm sure there's going to be a lot of people who have a hard time trusting this at first, especially like the real hardcore DeFi people. So we're trying to really build bridges there and kind of educate like how we do things. And in the DeFi space, it's not really an issue because when you're trading with these pools, you don't have to have. I mean, the deeper liquidity is going to have a really positive impact on the price execution, which is what we need, in the DeFi space for trading to become more efficient, institutions to come in, start using these platforms. And when that happens, the volumes go up, which means the fees that are generated go up, and then more revenue for like sushi holders. And as that happens and more people supply, like institutions will start coming in on the supply side. And then, the whole system grows that way. So this is something that we need. And I think that if we're successful, it's not a reflection of our own talents beating out competition. I think it's more a reflection of the industry maturing and everybody growing together, which is kind of what we are. We empower other platforms. And that's what we want to do with the Mirren proposal on SushiSwap. We want to improve the liquidity by bringing in other capital from third-party sources. And then all of that will have a trickle-down effect on the entire sushi ecosystem. And that's just one of the spaces. Obviously, all the CeFi exchanges we trade on. The idea is we bring liquidity, and then they are able to not worry about the liquidity. They just have a really good trading environment, and then they can go focus on regulatory aspects in whatever region they're in. They can focus on user acquisition. They can focus on making crypto more friendly to retail. So basically, yeah, I mean, it's like a great way to empower all the platforms that we're with. So that's kind of our strategy, and we kind of want everyone to succeed in the space. And we're very non-competitive.
Yeah, you sort of read my mind when you were going to the Mirren proposal. I was going to ask you about that.
Mm-hmm.
So were you guys involved in the Mirren proposal early on with I think you said you were doing stuff on Binance Smart Chain?
That was actually after. They had published an article about the Mirren proposal, the first article. I think it was only one article on Medium. And we were on a call with Xerox Maki and the rest of the sushi team. And, they shared this information with us. And, this is kind of exactly what we want, because we don't want to be like we're infrastructure builders, but we're more traders, right? We're more liquidity providers. So we want other people building front ends, acquiring these user bases, getting the volume. And then we just kind of plug in on the back end, right? That's a win-win because we don't have to worry about all that other stuff, which we're not as good at. And we just focus on our strengths, which is trading. So, the Mirren proposal is a way for like centralized exchanges. I think they were going for like centralized exchanges like Binance to be able to take user funds with the permission of the user and then deposit it into Sushi so that you're generating yield. And then it's kind of like bridging the passive CeFi users into the DeFi space and making assets more efficient. So that's essentially what our model is too. We're using our own capital at the moment in DeFi, but we can, we invest for other people invest in, our strategies, and then we put that into play. So it's a similar idea, and it's something we're very excited about. Anything that can bring us users and flow is a win for us. That's what we want. So we're looking at all the networks, whether it's BSC or it's Polygon or it's any of the other layer twos. We can go there if there's users and volume. And then we also want, things like aggregators, like 1inch is great because they can direct traffic directly to our smart contract, but also things like the mirror proposal for sushi, that's great too. So we can go there. We're very protocol agnostic, platform agnostic. We don't get really into the politics of all of it very much. And there's a lot of politics these days around DeFi. But we just want to make the trading experience better for everyone, and that's kind of what we're doing.
Gotcha. So two things. First is to anybody listening in, this is an open AMA, so feel free to click the little raise your hand button if you want to ask a question. And second is that I got a question from the YouTube chat, from the live stream. This CJ Wheelock asks, have any exchanges declined to work with Wootrade, and if so, why?
Oh, that's actually really. I didn't even know we're live on YouTube. This is
Oh, yeah. Yeah.
yeah. No, okay. No, this is a good question from CJ. He's actually part of the Wootrade community, so it's interesting that he asked this question now. I think it is have people declined. I mean, people are definitely a little bit. I guess we use the word risk averse when dealing with new players in the industry. So we've had a lot of success because we're based in Taipei. We also have an office in Shanghai, so Taiwan and Shanghai, because that's where a lot of the traders are located. And this region, we know everybody very well, all the big trading platforms. We have contacts there, and we go to meetups and events, and we know them well, and they know us. So for that, when we started, the business development side was very easy. It was just, because when you have that reputation and trust, whatever you do, sure, fine, like we can go along with that. We'll support you, because we're also their biggest clients. We're not just trying to, pitch them a deal. We're also their biggest client. So there's a lot of trust, and there's a lot of incentive for them to want us to succeed. So they're willing to help. And so at the beginning, a lot of these Asian exchanges and trading platforms, they were the first ones onboarded, and we onboarded them with relatively zero effort in terms of, really having to push, right? It was just basically like, here's our idea. We laid it out for them. They tried it out. Great. Okay, it works. Good. On the Western side, it's been a little bit more slow just because, a lot of people aren't really familiar with us. They're not really familiar with our custodians. They're not really familiar with the team. So people are very interested in the model, right? Because anyone who has a background in traditional finance has witnessed, the model shifting to lower commission fees, more aggregation. I mean, the whole internet model has basically gone towards aggregation. If you look at things like Netflix, you look at things like Uber, like everything eventually is going this way. It's just more efficient. You take out middlemen, right? This is a good thing. And yeah, so everyone's very interested in the model, but some of them have been a little bit slow to actually close deals. And some of them are more like a wait and see, like we have verbal commitments, but it's not like anything set in stone. So that was one thing. I mean, there's probably some exchanges out there that might view us as a competitor, and we're definitely not trying to compete with anyone. We want everyone to succeed, and then that makes us bigger. But yeah, I mean, that could be another thing that happens in the future as we get bigger, as people suddenly might not want to be as keen to work with us. But I don't think so, because, I mean, I don't think it'll be having a big impact on the project, just because the way everything's structured, it's really designed to put everyone's interests in the same direction. And once you become a stakeholder on the Wootrade network by staking the tokens, you're also very incentivized to make sure that the ecosystem continues heading in the right direction. So even if we might close some doors, I will definitely be opening other doors with that. So yeah, I hope that answers CJ's question. It's actually a really good question. I'm glad he brought it up here in this environment. Because instead of just asking all positive questions all the time, like, it's good to get some of the more challenging ones as well.
Yeah, and sort of a silly topic. Have you guys considered splitting the Woo token into Woof tokens? A million Woof tokens for each Woo?
Yeah, we've missed a good opportunity there from a marketing perspective. I mean, the founders never would have let me do it, but it did actually come up in the communities a few times when all these dog coins were blowing up, and yeah, I mean, there's still lots of opportunities for us to make the platform more, I guess, retail friendly. One of the biggest complaints that we've had, not complaints, I guess, criticisms would be that it's really hard for people to figure out what we're doing because information's kind of scattered all over the place. We don't have this long history of being vocal in the space. We don't have like an SBF or a CZ. I mean, we have very talented founders, but they're very focused on, with their work. And they're not on Twitter all the time. So, yeah, I mean, a lot of people have been like trying to get information, and one of the things we're trying to do is build it, make it more, just easy to find, easy to understand, and all the things we're working on, because we're working on so many different things. Our team is huge. Like when you look at like average blockchain teams, I mean, most are like around 10 people. I think from maybe the top 50, you probably have bigger teams like 20 to 40 people. But we're actually like when you put together like Kronos and then Wootrade, we're like over 100 people already. Cover many different aspects of the space on this, from the CeFi trading, the HFT trading, the market making, and then the back end developers, the front end developers, the legal, the HR, the recruitment. Like we're going to universities in Taiwan and talking to a lot of the students there, especially in mathematical fields, and we're giving them information about not just cryptocurrency, but just also trading, because we're trying to improve the bridge of talent from universities into our industry. So we're doing a lot there. And, I think this is going to be a brand that really grows in the future, and people start to recognize that, regardless of whether we succeed as a project, we're always trying to do things that make the industry better. So that's kind of our position and our brand, and we're trying to push that more. And hopefully we'll achieve that.
Awesome. Sorry, I just tapped my mic. Just wanted to remind everybody listening in, if you have any questions, feel free to raise your hand to ask them. Do you want to get into sort of like community building and like sort of what maybe your experience has been with trying to build the Wootrade community? What has worked, what hasn't worked, just in general experiences from that side of things?
Yeah, I mean, we launched the token on Halloween last year, and that was kind of the first time that people heard about Wootrade, even though the network itself, the B2B network, had been in use for over a year. And I think, about that network, I think we do like 300. It's on our website. We're doing like 300 million in volume per day, and that's spread out over different exchanges and wallets, and then obviously on our own platform and also on BSC. So we have a lot of things already happening in the background when we started building this community. The first month was very difficult because when you launch a token, the people generally who are interested in the token, they're very short-term investment strategy. They just kind of come for the pump, basically. So the first month was a little bit difficult with trying to keep everyone on the same page. But then slowly, I think we switched out some of those guys. Some of the short-term people left, and like I said, we just started. We put out some content, but it wasn't very concise. It wasn't very like in one space where you can kind of read it all, and that's something we're working on. But like I said, it had a really strange side effect that only the people who are willing to do the research were stumbling upon our community, and only the people who are doing the research were the kind of people that we wanted at that time, right? Because they were very long-term. They could see the vision. They could understand the scope of the project. So we were always very active, because that was one of the things I said. If we're going to have a community, we need to make it like a priority. We need to make it an important part of the project. It can't just be something we just expect them to buy our tokens and follow us in wherever we go. And the founders are very big on that too. They see the importance of community. And so they're very supportive of us on this. And so these people started coming into the community, and a lot of them were like researchers and stuff, that type of personality. And I would always get in like private conversations with them, and I kind of find out more about their background, because I'm trying to determine how people are finding us, and how we can amplify this effect. And a lot of them had like really good backgrounds, and it was, people from traditional finance, like people from big banks, people who are with VC funds, but like successful ones. And so it was really interesting how that happened, and that just kind of laid the foundations for really positive growth on the community side. And I'm glad it worked out that way, because this was at the start of the altcoin surge, and there's just so much distraction. There's so much noise. There's just so much other, shit coins, for lack of a better word, that are out there. And so when we were getting this high quality community, it was really a surprise, and it was really a positive effect. And I think if you go into our community now, you can see how active everyone is. We're always like, if you look at like social metric sites like Lunar Crush, we're always in like the top 50 of some of their rankings, even though our coin is still like 150 or 160 on CoinGecko. So we're trending way above where we are as a project, and that's mostly due to the quality of the people who joined our community at the beginning, and then our attitude. Our attitude, which is always to communicate, be transparent, jump in the Telegram and just answer any questions that come in, no matter how repetitive or basic or mundane the question might seem, because these people are, as they stumble in, that's part of how you grab their attention, you keep them there. So I love that is what we're doing, and I want to keep doing that. And I think it's had a big impact on why our community is, you're starting to see the woo hashtag on social media quite a bit. You're starting to see the memes, and that's a very positive sign, because when you have a strong community, like we've seen what it did for Chainlink, we've seen what it did for other projects who have had success in the past. When you ignore the community, it's very hard to build something sustainable, because anytime the market crashes, all these people are just going to disappear. But yeah, that's the community
Absolutely.
side. Yeah. What
Yeah,
about
yeah.
what about you? Do you have any tips for me? I mean, like, how can we, connect with more people in the DeFi space? Obviously, you guys are positioned very far into the DeFi space, so maybe you have some tips or ideas.
Well, I mean, I definitely have a shared experience with the Moon Boys, is what I typically call them, the people who come into a project day one to dump it day three. Uh,
Mm-hmm, mm-hmm.
um, but yeah, like from my experience, community building is really hard, and
Mm-hmm.
it takes a lot of active communication and listening as well, because like people constantly complain about like how you're communicating or things like that. So you always have to sort of update and try to refine and get it so that people just sort of absorb what you're communicating instead of spending time complaining about it or ignoring it. And yeah, like sort of just active initiatives, like just trying to like encourage interaction and being active in the community as much as possible is really what I've found to be sort of effective.
Yeah, I love the idea of these AMAs that you do for projects. And I know, like, on the Onsen menu, there's a lot of obscure, I mean, there's some very solid projects on there. There's also some ones that I haven't heard of before. So giving them like a chance to come on here and engage with the sushi community, I think it's a good thing. Maybe try to steal some of these ideas as well from my community, if you don't
Hey
mind.
man, hey
Um,
man,
yeah,
you know
yeah.
what they say, a good artist steal, or no, a good artist copies, a great artist steals. So yeah, steal it.
Yeah. Well, are there any other
Um,
questions from the Discord, the YouTube
yeah,
channel?
yeah, we got a bunch of people hanging out. I think. Oh, is that Aoki raising her hand saying she has a question? Oh, Aoki has a question. Okay,
Let's do it.
I thought they were going to cave under pressure. Oh,
Hi,
Okay.
Aoki.
Don't don't steal from our ideas. Just kidding. But we just want to thank you for being such an amazing ecosystem partner. I think this is one of the better AMAs as well. So that's it. Yeah, shout out to Lennox for the near-end presentation. We're really looking forward to our proposal.
Yeah, she cut out a bit there, but I think she was talking about how collaborating on the mirror proposal. But yeah, I saw you guys just tweeted about that today. Maybe we need to have like a update later where you can let us know how that's coming and how we can get involved, because that's something we're very interested in doing.
I'm not sure how to get out of this, but yeah, I'll leave you guys to it. But thanks so much.
I'll kick you. Don't worry.
Thank you.
Thanks, Aoki.
And we got some questions. We had a question from the YouTube chat. He says, from Ben Tulch, what do you think Wootrade's upside is, assuming everything goes according to plan smoothly? And on the contrast, what do you think its downside is, and what would cause it? I guess that's a bit of a vague question, but yeah.
Well, no, I mean it's yeah, he's leaving me some creative freedom here with the answer, but I can see what he's getting at. Something like we've always thrown out from the beginning is like in traditional finance, like these dark pools I mentioned at the very beginning. I don't know if anyone was still listening at this point. Basically, private equity pools where large players will go to trade without worrying about influencing the market, right? This is like what a dark pool is. They make up like 40% of all equities traded like on the stock markets. So it's a very large portion. And that's an example of a more mature market. And in crypto, we don't have this maturity yet. So we're still very fragmented. We still have different regions with different exchanges, and there's no connection between the liquidity. We saw the Korean, the kimchi, what do we call it? The kimchi tax or whatever, where the price on Korean exchanges was just so much. Yeah, exactly. Like we're seeing things like this, which is just a sign of market inefficiency. So the upside is if we can make crypto more mature as a trading industry, then that 40% target is also something that we could shoot at, right? And I'm not saying that Wootrade is going to be the only player in this space and we're going to be the only ones that succeed and all 40% is going to go on us. That's not the case. But I mean, we've seen the way trading volumes have shot up this year. I think like Binance is doing over 100 billion per day now. It's very incredible how much just revenue is being generated on these exchanges. So our goal is to make them more efficient, keep growing, and then we can start looking at that 40% number as maybe something that the volume starts to shift to. So that's a very big, ambitious target, but that's just kind of a sign of where things could be if the markets start to resemble more closely traditional finance, which they will, because institutions keep coming in, and as institutions come in, they're going to bring in more efficient, styles, and we even see that now, like compared to like 2018 when the price got up to 20K and then just crashed and died. This time Bitcoin went up to like 50 and then it crashed. Well, it went up to like 20, 40, crashed, and then but institutions are here, right? So they dampen the volatility. Institutions know when the market dumps, that's when you start to buy, right? That's what professional traders do. And then when the market shoots up, that's when you sell. So it kind of dampens the volatility compared to retail traders. And so we're getting more efficient markets. We're getting more stable markets, which is going to invite bigger players in. So we're going a bit roundabout with this answer, but long story short, there's a lot of upside for people who enable efficient business models within the cryptocurrency industry. That's the first part. Now you talked about the possible downside. I mean, I guess if you want to talk about like regulatory stuff, I mean, regulatory can make it very hard for exchanges. I don't know what that event would be, but it could be very bad for the entire industry if suddenly the U.S. really cracked down on all these platforms. We saw actually, I think the Department of Justice was going after Binance yesterday. I think that caused part of the Bitcoin sell-off. But I mean, that's always something we're monitoring. It's not something we can prepare for. We don't think it's going to happen, so drastically. but that's one of the things that would look at making it very hard for us to succeed. Um, I guess just a resistance, a lack of maturity, a lack of growth. If people don't want to move in this direction, institutions stop trading, and then more of the liquidity just goes into fragmented pools, and that's going to reward people with high trading fees who don't want to innovate, because they kind of can capture users and they're stuck there, and then they just charge whatever they want. But we don't think that's going to happen. Obviously, we think people are going to eventually become more aware, more mature, more efficient, right? And that would lead us to a more a more successful route. I think that would be the thing that would derail us a bit. Right now, we have a lot of momentum. We have positive feedback from users using our platform, from clients on the B2B side, from partners in the DeFi space, from community members, of course. So everything right now is quite positive. I guess it tends to be that way in a bull market, but I think we're positioned well. I think things are gonna be very bright for Wootrade. I'm very confident. I know the founders are very confident too, that we're going to get somewhere. We're gonna be in a good position.
Awesome. Yeah. And Mike was just asking if you guys did KYC.
Well, like on our CeFi trading platform, we do KYC, of course, because like any other CeFi platform, we're trying to grow within the existing regulatory frameworks, right? And that'll allow us to expand as quickly as possible. We don't want to be in a situation where, we're getting sued and things like that, going to jail. We don't want to have our founders be the next Arthur Hayes. That would not be good for development. So yes, the AML KYC, we have people who monitor this, and for I think it's 2 Bitcoin per day, you have to KYC. The exact details of that are still being ironed out. Now, put that on one side, that's the CeFi part. On the DeFi space, there are, I guess we can take more liberties with what we do. And part of that is decentralizing Wootrade. We're looking at a DAO-like structure, so that will kind of tie the community together more. It will also make it easier for us to innovate. And when that happens, we're going to be creating products. And some of our products are going to be like back-end products that plug into things like Sushi, for example, with the Mirror proposal. Other things could be standalone products, especially things like yield, because we are very good at generating yield through trading. So like yield aggregation, things like that. We haven't actually put the final designs on these products yet, but we're going through this design phase, this early design phase, and that's going to be more accessible for non-KYC. And we're really excited about that because it's just going to open doors to a whole nother world of collaborations and target a new market, right? Because I realize here in the Sushi AMA, a lot of you guys are very heavy on the DeFi side. You probably don't trust the CeFi people very much. So we're going to try to build bridges to you guys and create products that meet the standards and expectations of what you guys like to do. And hopefully, we'll be able to grow in that direction.
So I guess, is it like in the context of the DeFi stuff, it is sort of like I am permissionlessly like staking my assets to perform some work in a strategy that you guys have allocated as like a market maker, or because like how do you get around the KYC requirement, or sort of that KYC context for the DeFi stuff?
Yeah, I mean that could be one way. Like we haven't really put the finishing. I dropped my headphones here. But essentially that would be something that the model could look like. It's obviously going to be very trading related, whether it's pools like the ones we have on BSC currently, or it could be some form of like a yield aggregation where it's directing between different pools. Leveraged pools, leveraged trading that people can access directly. Like this is another thing that we're very good at doing. And really the key to the success is not in the pools or themselves. It's in the pricing. So we take like the pricing from our Wootrade network, which is an aggregated price anyway, across all the top platforms. And this is good because it's impossible to manipulate unless you targeted all the top exchanges at once, which would take an incredible amount of capital and planning to do, and risk because you still might not be successful. So our price tends to be very reliable compared to other reporting methods. We'll call them oracles for now. And then we are putting this directly into the block, and we're actually turning this into a side product. It's something that we're talking with Chainlink about because they know the Oracle game inside and out. But this pricing data is very useful. And we update it very frequently, right? So Chainlink oracles don't update quite as often as we have to update ours in order to maintain the efficiency of the pools. So yeah, I mean, this is kind of the secret to what we're doing. We're just better at quoting prices, more accurate market prices, and we do it more frequently, and it allows us to be more efficient. And so then there's a lot of things you can do from there, right? Like if we're creating separate products with Chainlink, that's another market we can move into. If we're creating pools on Sushi, that's something we can do. It's completely different, but it's another thing that we're going to be doing, right? And even we could have like a standalone like leveraged DEX, like that's something that's also been discussed. So there's a lot of things we can do in the DeFi space. When you have the advantage on pricing, when you have the advantage on liquidity, and you have the advantage on yield generation, like these three things, it's really hard to miss, right? I mean, we're able to do things that other people simply don't have the resources to do because a lot of them are just, a team of software developers. We are a team of software developers, but we're also the user, the client, and someone with like our team has like 50 years of trading experience in like centralized domains. So it's quite powerful, this recipe we have. And I think that's why a lot of people in our community are very excited once they put the pieces together and they see what we're working on. That it's a very strong narrative for success. Something we're going to keep building on.
Yeah, we're gonna start like sort of wrapping up in the next couple minutes, but I have a few questions. On one, I want to just make sure I got this right or that I'm understanding it right. So are you saying that like you guys will be able to create token pools on SushiSwap where the Oracle price is basically set by you guys so that you could have like a controlled strategy, or am I misunderstanding you?
Well, the Miram proposal isn't about the pricing as much. The Miram proposal is more about controlling other parameters like fees and things like that. So, this is obviously a conversation we'll have to have with the Sushi development team as well. But yeah, for now, we're not really going into the controlling the pricing. That's what we're doing on BSC right now. On BSC, we have those 5 smart contract pools that's actually we partnered with Dodo, the company I mentioned we invested in, and yeah, that is like a fully controlled one. The Miram proposal is a little bit less customizable, I think, but who knows? Like, there's not really a team faster in this space than the Sushi team at adapting and innovating. So I think if we have good ideas on our side and we work with Sushi, I think anything, we can build anything, and that's one of the reasons we were eager to align ourselves with Sushi early on. And I think there's a big future there.
I see. Okay, gotcha. It's good to make sure I had it right in my head on that. But yeah, unless anybody in the audience who is listening has any questions. Oh, we have a question from the YouTube chat. Okay, well, this is sort of a joke. They said, can we have a Ric Flair co-star on an infomercial about Woo? Could be a hit maker.
Yeah, the name
yeah.
has been surprisingly popular because Wootrade is kind of a name we settled on because the woo sound, right? When you make a good trade. And then obviously like the Ric Flair memes, because that's his trademark as well. So that was a big one early on. Also, there's apparently a gang in Brooklyn called the Woo that Pop Smoke was so familiar with. So we've got a lot of different influences at pop culture memes and things going on. So yeah, that's been fun, and I think the community has a good time with it. Yeah, it's like sushi as well. I mean,
Wootrade
sushi's so
clan.
well branded. Yeah, the Wootrade clan. Yeah, that's another one. Yeah.
What's up, Tangle? You had a question?
Hey there. Sorry I showed up a little bit late here, and maybe this got
No
touched
worries.
on. But as far as you're mentioning having like a CFI side to it and then a DeFi side to it, now wondering if there's some way of like when you're talking about pools and everything and creating liquidity as well, were the DeFi pools designed to be able to interact with the CFI side of things? Or could there be some way for like the DeFi people to get some exposure to CFI, but still, I guess, you know, if I may want to stay away from the KYC AML, but being able to provide liquidity. Was that something discussed already, or is that something that's in the mix?
Yeah, Tango, that's an awesome question, point that you made. And I didn't even touch on it at all, so it's good that you did. But with the pools, we definitely rebalance from the CFI side. So like that's one way we deal with impermanent loss. We're using all our own capital at the moment. We haven't asked users to contribute any. But because we have so much liquidity aggregated across CFI, if one side starts getting bought up, we can rebalance from CFI. So that's one way it's connected, keeps everything tied together and removes like the impermanent loss issue. On the WooX, it's the platform that a lot of people are focused on because they can actually get on board right now. It's the CFI trading platform. We're looking at ways where we can make this, we're not there yet. But we want to be there in the future. Things like using MetaMask to sign up, including things like, just for an example, maybe something like Aave's pools where people would have access to it directly from the platform, right? So it's like I said, we want to be very transparent about how yield is being generated, and give people options to all this stuff, and then it would also bridge these communities together as well. So this is something we're very in tune with and we're looking at from a design element. But obviously, like you obviously put a lot of thought into this. So if you have any ideas about how this would work, you could just throw that into the chat or throw it into our Telegram or something, and it's something we can take back to the design team and look at it.
Yeah, and I guess just one thing that I wanted to touch on was just like if the DeFi people, whether it's even if it's just single-sided, single-sided stake it, or rather than like LP tokens or whatever for it, but even if it was single-sided to provide and like be able to generate yield that's still contributing that way towards the CFI side, if that was an option, because maybe your CFI side becomes more lucrative than the DeFi side of it. But this way here, it's still giving, the DeFi side that may have a ton of liquidity to help with as well, maybe to bridge that. But just curious if that was, maybe that's something to bring up later and whatnot. But I could see, DeFi people finding that quite lucrative, perhaps. So.
Yeah, no, absolutely. We definitely we love the single-sided element of staking because it's just way more user-friendly. The interest-bearing tokens, the interest-bearing LP tokens are things that we're really excited about just because it opens up these secondhand markets for these LP tokens and gives people liquidity. That's a thing. You kind of touched on, but like the idea of like the whole, not connecting CFI with DeFi, which is kind of where we're positioned, but also because we're so protocol agnostic, like we could be cross-chain, using either like a centralized bridge as the exchange or even developing a DeFi one, just because we have this capital on chain anyway, and we're good at like handling the price issue. But between networks, it's very hard to imagine right now in this space like Binance opening up like 4B, Echo, the withdrawals, right? Just everything's still so politicized, and that's something we're trying to go away from. So we could be the person that connects all these different players, and that's kind of what we want to do, both DeFi and CFI, and throw it all together.
Cool. Okay, thanks. I'll look into it some more here as well. So thank you.
Yeah, if you have any more ideas for us, we'd love to hear it. So we always welcome sharp ideas from the community.
All right, thank you.
Awesome. Thanks, Tangle.
You bet.
All right. So I think we're gonna wrap up the AMA here. Oh, my last comment is you guys should seriously consider having a coin split with the dog coin.
Yep,
Uh,
yep, yep.
You know, I mean, it might theoretically be possible for it to hurt you, but from what I've seen so far with Woofy, it looks like it is just pure profit. No harm doing it. But I don't know. Regardless of that, it's just sort of a fun idea. Thank you so much for coming out, Ben. I really appreciate your time and spending time with the sushi community to answer some questions and just talk about the project in general. I'm really excited to see sort of like the future DeFi steps from Wootrade.
Awesome. Yeah. And I need to be more connected, with the sushi community as well, because like Tango there, like a lot of good ideas can come out. So I'll try to drop in here and see what's going on from time to time. And yeah, definitely talk again soon.
Awesome. And what is sort of like the social media link for Wootrade and website that people should visit to learn more?
Woo.network is our website, woo.network. If you want to see like our CFI trading platform, it's just x.woo.network. It's in closed beta right now, so you would need like an invite code, but yeah, you can see what we're building, so you can see there's actually a product and it's not just a bunch of vaporware. And then yeah, Telegram, you can just search for like Wootrade official community or whatever it is, and then on Twitter we're Wootrader S with an S after. Somebody had Wootrade already. I couldn't believe it. Anyway, it's Wootrader S, and you can find us on there. I think just searching for Wootrade, I think will probably be the first ones there as well. But yeah, would love as many people as possible come in and give us some criticism, give us some feedback, give us some good ideas, or just say hello. We love all that.
All right, awesome. Well, thanks so much. Thank you guys for listening, and I will catch you guys next week.
All right, take it easy. Bye.